Well, hello there. It's Tyrone Jackson, the wealthy investor, coming at you with another stock market, this time investing tutorial. Now, notice a very interesting pattern is that a lot of people don't like to study in the stock market what makes a stock go higher. They just want to make a lot of money really quickly. Well, today I want to show you the benefits of actually studying in the stock market, and I have a question for you. Here is a 5 year chart of a company that I actually like shopping at. It's called Macys, ticker symbol M. See that right up there? Okay, over the last 5 years, if you look at this chart, you don't have to be a genius, you realize that Macy's has gone from $72.31 straight on down to the basement. And it's currently trading at around $5 and change. Now, in the exact same stock market, isn't this fascinating? Microsoft, member of the Dow Jones Industrial Average, trading at 174. 5 years ago, you could have purchased your Microsoft shares at $37, and in the exact same market as Macy's, look at what's happened. This stock has gone higher, 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 and will continue to go higher. How could Macy's be in the exact same stock market as Microsoft? One stock is heading up and the other is heading down. Well, let me explain that to you. The reason is you need to understand long term trends. So, the reasons that certain stocks will actually rise in the next 5 years is because they will be utilizing the technology of the day. What do I mean by that? Microsoft's biggest product right now is what? Something called the Microsoft Cloud. And they're selling cloud services worldwide to governments and large and medium sized businesses. Macy's, by contrast, is in what? In the retail business. Now, how many people are shopping in large stores these days around the world? Less and less and less and less. Therefore, most people are getting their items where? Online. Macy's still keeps pushing the old model because that's what they've done for years. And Microsoft is using what? The technology of the day. Do you see that? Cloud data storages and all the services that are bundled in the cloud are the technology of the day. Secondly, you need to learn what venture capitalists are funding. In other words, before a company like Microsoft goes public, guess what? It needs money from people who are willing to invest money in the company before it comes public. Those people are called what? Venture capitalists. And venture capitalists have the ability to bring stocks to market and companies to publicly traded markets when they're doing what? Most of the time, funding the technology of the day. Do you see that? Okay. The third thing you need to understand is what are hedge funds buying? Why? Because they tend to buy in 1 million share increments. And when they're buying stocks, you get charts that look like this. But when hedge funds are selling millions of shares, you get charts that look like that. So let's continue ever onward. Why is Bed Bath & Beyond, ticker symbol BBBY, $5, and in the 5 years it's heading down, down, down into the basement. In the exact same stock market, Costco is at $310 per share. 5 years ago, you'd have purchased your Costco shares at $116. And what has happened to the price of Costco shares on the way up? They are increasing, increasing, increasing. What is the difference between Costco and Bed Bath & Beyond? Costco is using the technology of the day. In other words, now you can order your groceries online and you can have them picked up or delivered to you. Bed Bath and Beyond, believe it or not, they're not utilizing the same technology and their competition like Target is. So the Wall Street institutions are what? Dumping this stock because they're not adapting, and they're buying these shares because they are adapting. Do you see that? It all goes back to getting a financial education, understanding the technology of the day, what venture capitalists are funding, and what hedge funds are buying. Now, I know a lot of you think that when a stock actually rises, that you're the one who's actually making it rise, and you're not. Why? Because you're not buying a million shares at a pop. When hedge funds are buying a million shares at a pop, guess what happens to the stock? The stock price goes up higher and higher over time. So what you and I want to do at retail as a retail investors, we want to ride this wave with them. Which brings us to our last company, which of course is Amazon.com. Not a member of the Dow Jones Industrial Average, but certainly a member of the S&P 500. And what do you think? Do you think this company is actually in line with the trend? Well, Amazon.com is the trend. 5 years ago, if you had purchased your shares at $357, look at what happened to the share price over the last 5 years. It has been up, up, up and away, up to over $1,952. And what happened a couple of weeks ago? The stock closed at $2,410. So how are you going to win big in the stock market? It's by remembering the three things that I just taught you. Is the company using the technology of the day? What are the venture capitalists funding before the company becomes public? And what are the hedge funds buying right now based on top line revenue? When you understand all of these ideas, you have a shot at picking companies like Amazon over and over and over. So your job is to do what? Is to study the stock market, become an educated, wealthy investor so you understand what trends the big money is behind and where is the top line revenue actually going. Got it? This investing tutorial will be the key to your success in the stock market in the next 5 years, because instead of guessing, you will actually be what? Educating yourself. For those of you who want to follow my trades and learn more about trends, top line revenues, dividend distribution, and how to choose companies that are successful to invest in, you can always join me here at WI Trade School. I hope you enjoyed this lesson. It is the key to success as we move forward.